Good morning. Welcome to this installment of the Pro Bono Partnership of Atlanta's monthly webcast series. Today we have Mindy Simon with us from Emory University, and she'll be speaking to us about road races, golf tournaments, and other sporting activities that your organization might be conducting as fundraisers. This is part 2 in our series on fundraising events, including galas, tournaments, and festivals. We had one on galas and auctions last month, and we have the third part of the series coming up in a couple months, and that will feature festivals and taste of events. Now, before Mindy tells you more about road races and golf tournaments, I want to tell you a little more about Pro Bono Partnership of Atlanta. Our mission is to provide free legal services to community-based nonprofits, and we do this by connecting nonprofit organizations with leading attorneys in the Atlanta area who are interested in providing their services related to business law matters. If you're interested in learning more about our organization, please visit our website. Our clients are 501c3 organizations that are located or serve the greater Atlanta area, and that's a pretty broad definition of Metro Atlanta. It's basically all of North Georgia. We serve low-income and disadvantaged individuals, or who serve low-income or disadvantaged individuals, and are otherwise unable to afford legal services. Also on our website, you'll find a great number of resources, including articles and past webcasts, and this webcast that Mindy is going to be presenting today will also be on our website and available for you to watch and view in just a couple of days. Now, a brief legal disclaimer. Please keep in mind that the information that Mindy will be sharing with you today is just general advice. If you have specific questions about your organization and the fundraisers it's considering putting together, please reach out directly to your attorney. And now I'll hand over the mic to you, Mindy. Thank you.
Thank you. Good morning and welcome to Fundraising Part 2. During this webinar, I'm going to focus on road races, golf tournaments, and at the end, other sporting activity fundraisers. We're going to begin today with a brief discussion of charitable donations and acknowledgments. Then we'll spend some time on tax, including unrelated business taxable income and Georgia sales tax. The Fundraising Part 1 webinar had a really good discussion of sales tax. I'm only going to do a brief overview of sales tax this morning. Then we'll spend a few minutes on gambling, which includes raffles and door prizes, before getting into the specifics of races, walks, golf tournaments, and other active fundraising events. So first, and this is going to be important as we go along, what is a charitable donation? So a charitable donation is a donation or gift to or for the use of a qualified organization. It is voluntary and it is made without getting or expecting to get anything of equal value. Essentially, there must be donative intent and without the expectation of receiving something of value in return. This is going to be important when we get into road races and golf tournaments and talk about entrance fees and greens fees. A donor can't take a deduction without a receipt, bank record, or canceled check for a donation of any amount. For donations of $250 or more, a donor must have a written contemporaneous receipt from the charity acknowledging the contribution. This acknowledgement must contain the name of the charity, the amount for the contribution or description of the non-cash contribution, and one of the following: a statement that no goods or services were provided, if that is the case, which often is not going to be the case when you're talking about these fundraisers. Description and good faith estimate of the value of goods the charity provided in return for the donation, which is really what we're going to be talking about today, or state that the goods or services provided consisted entirely of intangible religious benefits. And again, this is all going to be important when talking about fees, raffles, and sponsorship payments. So the next subject we're going to talk about before we get into the fun things is tax. I'm going to start with unrelated business taxable income and then spend a few minutes on Georgia sales tax. So what is unrelated business taxable income, also known as UBTI or the income tax, which is UBIT? It's income that's derived from a trade or business activity that is not substantially related to the tax-exempt organization's purposes and is taxable as if earned by a comparable for-profit enterprise. How do you know if you have UBTI? So there's a test. So first, you have to have a trade or business, and the activity is carried on for the production of income from the sale of goods or services. Second, it has to be regularly carried on. And you look at the regularity and continuity. Is it carried on in the same way as a comparable commercial activity? Third, it's not substantially related to the mission of the organization. So the mere fact that the income produced can be used to carry on the tax-exempt purposes of the organization is not a sufficient causal relationship. The activity must be related. So for example, if you're conducting a road race, that may not be related to the tax-exempt organization of your entity, even though it raises money that will benefit the entity. With every good rule, there are many exceptions. We're just going to talk about a couple of those this morning. I'm going to talk about volunteers and selling donated merchandise. So number one, the exception to UBTI with volunteers. If substantially all the work to carry on the trade or business is provided by volunteers, the trade or business is excluded and the resulting income is not unrelated business taxable income. So the issue of substantiality arises when a business is conducted in part by volunteers and in part by an organization's compensated employees or outside parties. Courts then look at the substantiality of the volunteers' effort compared to the total number of hours provided by employees. So we know that 77% is not good enough, and it's most likely 85% or more of the work needs to be performed by volunteers in order to be exempt from UBTI. Another exception to UBTI is selling donated merchandise. So an unrelated trade or business does not include the trade or business of selling merchandise, substantially all of which has been received by the organization as gifts or contributions. All right, now we're going to get into one more, which is qualified sponsorships. And this is going to sound familiar to you when you're thinking about putting on a fundraiser.
Mindy, I have a question about what you were just talking about, volunteers versus employees.
Yes.
So if you have a road race, if you're conducting a road race as a fundraiser, and about 50% of the work is being done by staff, and
right.
50% is being done by volunteers, would that mean that would be, the road race fundraising would be taxable?
Excellent question. And we're going to get to that in a little bit more when we talk about road races, but I'll tell you now that there's probably a different exception. But that is one possibility. If your entire road race was conducted by volunteers or 85% more, then clearly you don't have UBTI. One of the questions that we'll ask is regularity. Is it regularly carried on? If you're only having a road race once a year, once every couple of years, that's not going to be considered regularly carried on for purposes of UBTI. Okay. All right, so now we're going to talk about qualified sponsorships. So what is a qualified sponsorship? So a trade or business for purposes of UBTI does not include the solicitation and receipt of qualified sponsorship payments. So a qualified sponsorship payment is a payment made by any person with respect to which there is no arrangement or expectation that the person will receive any substantial return benefit. Other than the use or acknowledgement of the name, the logo, or the product line of the person's trade or business. So a substantial return benefit is a benefit other than the use or acknowledgement of the payer's name, logo, or product lines, or benefits provided to the payer or the payer's designee in connection with the payment of the aggregate fair market value of which during the tax-exempt organization's fiscal year, it doesn't exceed 2% of the amount of the payments. So this could include exclusive provider arrangements and goods, facilities, services, or other privileges. And we'll get into examples of this later in the website when we talk about sponsorship payments. Okay, so that's federal tax, federal income tax. We're now going to spend a few minutes talking about Georgia's sales tax. And as I said before, there's a great presentation on this earlier. So we're just going to spend a few minutes talking about it today. So sales tax varies by state. In some states, if you're exempt from income tax, you are also exempt from sales tax. That's not the case in Georgia. In Georgia, most exempt organizations are not exempt from sales tax. So for purposes of this presentation, the bottom line is that sales at retail of tangible personal property are subject to tax unless there's a specific statutory exemption. Further, as we'll discuss, games or amusement activities are subject to tax, and that's going to get into we'll get into a little bit of the debate with the Department of Revenue on what is a game or amusement activity that is subject to sales tax. All right, so our final topic before we get into road races and golf tournaments are raffles and door prizes. And we just wanted to, I know that most often you're not going to have a raffle or door prize with a road race, but sometimes you might have something like this with a golf tournament or other event. So while raffles are typically considered illegal gambling in Georgia, the Georgia Code allows raffles to be conducted by nonprofit tax-exempt organizations that obtain the proper license. So to legally conduct a raffle, a nonprofit organization must obtain a license from the sheriff of the county in which the organization is located. If the organization is located in one or more counties, it only needs to obtain a license in the county in which the headquarters of the organization is located. I'm not going to spend a lot of time discussing an application for a raffle license here, but on its website, the Pro Bono Partnership has a great article on obtaining a license and conducting a raffle, and you can have all of your questions answered with that article. But once you do have a license and you are legally conducting a raffle, you may have questions about charitable deductions and tax. So the cost of a raffle ticket is considered the fair market value of participating in the raffle and is thus not eligible for charitable deductions, so you wouldn't have to provide an acknowledgement for that. But what about tax? So walking through the UBTI elements first, we'll try federal income tax. While this may be a trade or business and not substantially related to the organization's exempt mission, it's most likely not regularly carried on. Most likely you're not having a raffle on a regular basis. Therefore, the net profits from your raffle should not be subject to unrelated business income tax. What about sales tax? So we currently understand from the Georgia Department of Revenue that they do intend to assess sales tax on the cost of the raffle ticket. However, they're planning to release additional information in the near future on this topic, so please make sure you double check what their final decision is when that information is released. Door prizes are a little bit different. If there isn't a separate purchase price for the opportunity to participate in the door prize, then it appears from what we're hearing from the Department of Revenue that they do not intend to collect sales tax on those opportunities to enter into a drawing for a door prize. But again, once that information comes out from the Department of Revenue, you should double check that.
So if you have a raffle and you have raffle tickets that you sell for $10, currently you should be collecting and remitting sales tax on it.
Yes.
But if it's a door prize, you don't.
But if it's a door prize that doesn't have a separate purchase price for that opportunity to participate in the door prize, then what we understand currently from the Department of Revenue that you don't have to collect and remit sales tax on that. But we're still waiting for the final information from the Department of Revenue that will answer these questions.
Okay, thank you.
Okay, thanks. All right. So now we are into road races and walks. I'm going to spend a few minutes discussing permits and volunteers, the tax consequences around entrance fees and sponsorships, and finally releases and security and contingency plans. So first up is permits and volunteers. So I have to say, it is probably going to be helpful to work with a professional race coordinator who handles police, permitting, and certifying the race route if you want to conduct a road race. If you want to do this on your own, however, or if you want to see what is required, you need to check with the county and or city in which the race is being conducted. DeKalb County, for example, requires you to submit a special event permit or a special event application 30 days or more prior to your event taking place. And you would have to submit that along with your IRS determination letter and a copy of your proposed route or map. And you also have to apply for a permit with DeKalb Public Safety. Volunteers, as you are well aware, are essential to having a successful race or walk. Some categories of volunteers that you want to consider are registration, t-shirt hander-outers, route monitors, water stations, setup and cleanup, and cheer stations. You really can't have enough volunteers. Emory, for example, for just one of its road races, has approximately 400 volunteers. So what about entrance fees and sponsorships? So the value of the actual entrance fee for road race itself is not tax deductible, and you would not need to provide an acknowledgement for that. The fair market value of what the participant is receiving is essentially what they're paying for the entrance fee. If you think about everything that goes into providing a road race, from security to all the volunteer effort and drinks and food, it really is going to be the price of your participation. But what about tax? So let's look at income tax first, and this gets back to the question we were asked earlier. So walking through the UBTI, unrelated business taxable income, this may be a trade or business and not substantially related to the exempt entity's mission. However, it is most likely not regularly carried on, and therefore the net proceeds from your entrance fees should not be subject to unrelated business income tax. Sales tax. So, as far as sales tax is concerned, we currently understand from the Georgia Department of Revenue that they do not intend to assess a sales tax on entrance fees. There's been some debate, however, on whether the entrance fee is an amusement activity that is subject to tax. So we're still waiting to hear on the final verdict on this from the Department of Revenue. So please, when this comes out, and we expect it to come out in the near future from them, make sure that you double check. But at this point, we're hearing that they don't intend to assess a sales tax on entrance fees. Okay, sponsorship payments. These are really the trickiest part of thinking through unrelated business taxable income. So let's go back to the sponsorship rules one more time. So you can display a sponsor's name or logo, but no qualitative or comparative statement or statement endorsing their products. You also cannot provide the sponsor with a substantial return benefit. So all goods and services received by the sponsor from the charity must not exceed 2% of the sponsorship payment for the year in order for the sponsorship payment not to be considered unrelated business taxable income. The sponsors are able to set up tables, however, with information on the sponsor or items for the participants, or they can provide you with items for the participants if you want to give them goodie bags or other products for participating in the race. What happens if the fair market value of the benefits given to the sponsor exceeds 2% of the amount of the sponsorship payment, however? So if it's 2% or less of the amount of the sponsorship payment, the benefit is completely disregarded, and the entire payment is a qualified sponsorship payment, and you don't have to worry about unrelated business taxable income. If, however, the fair market value of the benefit exceeds 2% of the amount of the payment, then except to the extent the benefits constitute a use or acknowledgement, the entire fair market value that they've received is considered a substantial return benefit. And that portion will be analyzed to determine if it's unrelated business taxable income. So it doesn't fall into the safe harbor. So really the goal is not to give your qualified sponsors more than 2% of a return benefit for donating and sponsoring your race. Okay, so as an example, so let's assume that an entity sponsors a nonprofit's annual fun run. The company provides fruit and drinks for the entity to provide to the participants. The nonprofit recognizes the company's contribution by listing it as a sponsor on all marketing materials for the run, as well as on the t-shirt given to the participants. The marketing materials only contain the sponsor's name and logo, so the nonprofit's inclusion of the entity's name is the acknowledgement, and it's not a substantial return benefit. So the provision of the food and drinks are qualified sponsorship of payments. There's no unrelated business income tax on that or any other money that they might have provided along with those products. So that's tax. So releases and contingency plans on the next slide. So we're just going to spend a few minutes talking about some practical aspects of having a road race. So first of all, every participant and parents or guardians, if the participant is a minor, should sign a release and waiver. So this release should be specific to the road race. It should detail the risks of participating in the race, for example, strains, sprains, broken bones, inclement weather. You don't have to have a paper release, and this can be done online. So keep in mind, and hopefully none of you have this confused, that releases are not insurance. And you need to make sure that you're adequately insured for the event. In addition, DeKalb County, for example, when you're submitting your special events application, they require you to provide a valid certificate of insurance showing general liability insurance. So you should also make sure that you have a good emergency plan in place and coordinate in advance with the police and with EMS. Particularly, you should make sure you have EMS personnel at the race. As part of your emergency plan, you should make sure you know who is taking the lead to handle a crisis situation, and you should communicate and how you communicate with volunteers and participants. One thing you should consider capturing during registration is all participant and volunteer phone numbers so that if there is bad weather or there's an emergency, you can quickly push out a text to all your participants and volunteers and let them know if the race has been canceled, if the race needs to be rescheduled, or if there's an emergency, what should happen next. And that's it for road races. Okay, so moving on to golf tournaments. We're going to some of these topics that we're going to discuss are the same that I've talked about with road races, but I'm also going to talk a little bit more about entry fees, mulligan packages. We'll talk about sponsorships again, as well as releases and contingency plans again, which and all that will sound pretty familiar. So similar to the situation with road races, the value of the actual golf fees themselves are not typically tax deductible. The normal and usual green fees for the course being used for the golf tournament would not normally qualify as a legitimate income tax deduction. However, the additional cost of the golf tournament interest fee that is over and above the usual green fees and other items being provided to the participant may be an acceptable tax deduction. Again, as with road races, walking through the UBTI elements, while this may be a trade or business and not substantially related to the organization's exempt purpose, it's most likely not regularly carried on and therefore isn't unrelated business taxable income. And those net proceeds should not be subject to tax. Sales tax, however, is again kind of a sticky issue. We currently understand from the Department of Revenue that they do consider the cost of greens fees to be subject to sales tax, and you would need to withhold and remit sales tax on this. But again, the disclaimer is that they are planning to release additional information soon, so you should double check that when it comes out. As for sponsorship payments, you perform the same analysis you went through for sponsorship payments for races. If you do give your sponsor the ability to play in the golf tournament, though, you should really be careful to make sure that you haven't exceeded the 2% threshold. It's going to be much easier to do with golf tournaments than it is with road races. Finally, what about packages for mulligans, where the charity includes several do-over options and charges a set price for the package? So again, the Department of Revenue has not issued final guidance on this, but we understand that they consider these the payment for these types of packages a donation. that would not be subject to sales tax. But again, please double check when they release that information in the near future. So on to releases and contingency plans. This slide should look very familiar to the slide we talked about for races. You should make sure that every participant, including parents and guardians, if the participant is a minor, signs a release and waiver. The release this time should, of course, detail the risks of participating in the golf tournament, which may be slightly different than participating in a road race. The golf course may have a required release, but you should make sure that your organization is also released. So either if you have one releasing both, or you have separate releases, which may be a bit of a hassle, but make sure your organization is also released in the event something happens. Again, keep in mind that releases are not the same as insurance, and you need to make sure that you're properly insured for the event. And finally, you should make sure that you have a good emergency plan, which takes into consideration, in this case, the consumption of alcohol. And finally, once again, you should make sure that you capture all participant and volunteers' phone numbers during registration. So if there's an emergency or inclement weather, they can push out a text quickly to all of your participants and volunteers.
We have a question about mulligans. Can you talk up to that again? Are they tax deductible?
Are mulligans tax deductible?
Mm-hmm.
You know, I think that they could be tax deductible. Well, that's a
suggestion. How could you make it?
Well, let's see. Is that a donation? That's a really good question. I mean, you're getting something of benefit in return for the golf tournament. You know, the Department of Revenue does regard it, it sounds like the Department of Revenue is going to regard it as a donation for the purposes of assessing sales tax. But here the question is, are you really getting something in return for it? And you know, that's a good question.
Okay. So that would be something that we would need to talk about.
Yeah, we can talk about that.
Yeah. Okay. And also a question about the sponsorships, safe harbor. Can you give an example of what happens when a sponsorship falls outside the 2%?
Right. So if the sponsorship falls outside the 2% safe harbor, so what you would have to do is if it is outside if it's outside the safe harbor, then you look at the fair market value that the sponsor has received, and you would have to analyze that to determine if that entire amount is unrelated business taxable income. It wouldn't just be the 2% that would be that could be considered UBTI, but it would be the entire amount of the fair market value that's received by the sponsor that you would need to analyze whether or not that was going to be a taxable payment.
Okay, so you might have to pay tax on that.
You might have to pay tax on that, but the rest of that, above that, the amount that the sponsor receives in return should not be subject to UBTI.
Okay, all right, thank you.
You're welcome. All right, so the last slide we have is on other events. So sporting clay shoots, bike races, softball tournaments, other sporting events that you might have for a fundraiser, and additional considerations that you might want to keep in mind. I mean, essentially, you're going to have the same considerations for operating these that you have for races. And you should walk through the same analysis for unrelated business taxable income, for sales tax. Releases and insurance are the big thing when you're talking about some of these events, particularly with regard to events that involve shooting. You should really carefully tailor the release to the event in question and list the possible risks the participant is undertaking to make sure the participant clearly assumes the assumption of the risk. Even more importantly than with a golf tournament, the gun club for a sporting clay shoot will most likely have a release, but you also need to make sure that your organization is released as well. And it's critical that you have appropriate insurance to cover the event. And then finally, you should just make sure that you have a contingency plan and emergency plan in place that is appropriate for the event in question. So that concludes the prepared remarks that I have on fundraisers, but I'm happy to answer any other questions that we have.
Right now, we don't have any additional questions. We have a couple people typing up questions, so.
Okay.
So what concerns are there if there is alcohol available but it's not being provided by the organization that's actually hosting the event?
So
Like
there
maybe
are,
if it ends
sure.
at a restaurant and the restaurant is serving alcohol, but then it's not being paid for by the nonprofit.
No, I mean, ostensibly, the restaurant has servers and bartenders, and the restaurant has appropriate insurance and is licensed to serve the alcohol. So, from a liability perspective, it does sound like you've really transferred that potential risk to the organization that is serving the alcohol, and it isn't necessarily being retained by you. However, if there is alcohol being served kind of in connection with your event, I just would make sure that you have had that discussion with your insurance providers and that you have appropriate insurance that's going to cover anything that could happen with someone leaving your event. Okay. And then for an emergency plan, I mean, if they're being served alcohol and they're participating in a golf tournament, for example, and they're out in the sun all day long and people are consuming alcohol as they go along, you just want to make sure that you have an appropriate emergency plan in place that takes into consideration that people will have been out in the sun and drinking alcohol for several hours.
It looks like we have one more question being typed up. No, that's they changed their mind. I think that's all we have right now.
Okay.
Thank you, Mindy.
Great. Thank you so much.